need thousands of dollars to start investing? Well, think again. In 2025, even with just $100, you can begin building your financial future. In this video, we'll show you how to make that first $100 investment work for you, step by step. So, stay tuned, because your journey to financial growth can begin today. Welcome to Inspire with JR. I'm JR, and in today's video, we're going to show you how to get started with investing, even if you only have $100 to spare. A lot of beginners feel overwhelmed when it comes to investing, especially if they don't have a lot of capital to start with. But here's the thing, starting small can be a powerful strategy, and we'll break it down for you so you can start building wealth in 2025, even with just $100. Now, before we dive in, make sure to hit that subscribe button to stay updated with more beginner-friendly investment strategies, and let's get started. So, you're wondering how to get started with just $100, right? Well, let's explore some practical ways you can make your money work for you. One of the biggest obstacles to investing in stocks is the high price of shares from companies like Amazon, Tesla, or Google. But with fractional shares, you don't need to buy a whole share. Instead, you can purchase a fraction of a share. For example, if Amazon stock is priced at $3,000 per share, you can still invest as little as $100 to buy a fraction of that share, say 1/30th of a share. Many online brokerage platforms now offer this option, allowing you to invest in expensive companies without needing thousands of dollars. This is a great way to start small and still have exposure to some of the best companies in the market. Exchange-traded funds, ETFs, and index funds are perfect options for small investors. Why? Because they offer built-in diversification, which helps reduce the risk associated with investing. Rather than investing all of your money into one stock, you can spread it across a variety of assets, stocks, bonds, real estate, and more, by investing in a single fund. ETFs and index funds often have low fees, which means more of your $100 goes toward your investment rather than towards management fees. A good example is an S&P 500 index fund, which tracks the performance of the top 500 companies in the US. Even with a small investment, you're getting exposure to some of the biggest and most successful companies in the world. If you're not sure where to start or if you don't have the time or expertise to manage your investments actively, robo-advisors are a great choice. These are automated platforms that use algorithms to manage your investments for you. You simply answer a few questions about your risk tolerance and investment goals, and the robo-advisor allocates your $100 into a diversified portfolio that fits your profile. The best part is that robo-advisors often have low minimum investment requirements and low fees, making them an ideal option for beginners. Some popular robo-advisors include Betterment and Wealthfront, which allow you to start investing with as little as $100. Cryptocurrencies have become increasingly popular, but many people still see them as too risky or complex to invest in. With $100, you can dive into the world of crypto without committing too much capital. Platforms like Coinbase, Gemini, and Kraken allow you to purchase fractions of cryptocurrencies like Bitcoin, Ethereum, and even smaller altcoins. Micro-investing in crypto allows you to build a position over time, potentially profiting from the long-term growth of the market. However, it's important to be cautious with crypto. Prices can be volatile, and the market is still relatively new. You should only invest money you're willing to lose in the short term, as the value of cryptocurrencies can fluctuate wildly. One of the key factors in building wealth over time is consistency. You might think $100 isn't a lot, but investing small amounts regularly, whether it's $100, $50, or even $20 a month, can add up over time, thanks to the power of compound interest. You don't have to make huge investments all at once to start seeing returns. Even small, consistent investments can grow exponentially, especially if you start early. The key is to stay disciplined. Make a habit of investing regularly, even if it's just a little bit each month. This dollar-cost averaging strategy allows you to buy into the market at different price points, helping to smooth out market volatility over time. As a beginner, it's easy to make some common mistakes, so let's quickly touch on a few things to avoid. Don't put all your money in one asset. Diversifying your investments across multiple assets like stocks, bonds, and ETFs helps reduce the risk of significant losses.